I am Reed, just a normal 27-year-old guy talking about building wealth and getting your life together in your 20s. Today, I want to talk about something that has been on a lot of our minds. The current wave of AI IPOs, it feels like a pivotal moment, right? With companies like SpaceX leading the charge, their prospectus honestly reads like something out of a sci-fi novel. Full of grand visions and ambitious plans, SpaceX just started trading publicly under the ticker SPCX, breaking records and making a lot of headlines. Some folks are calling this the start of a golden age for retail investors in AI. Others, however, are seeing it as the beginning of the end, a classic bubble about to burst. This is just the first of three massive AI focused IPOs we re-expecting this year. Anthropic, the company behind Claude, confidentially filed to go public earlier this year, likely in the fall, and OpenAI, the company behind ChatGPT, just announced this week that it too has filed its S1. With the SEC, these IPOs are truly breaking records, especially for SpaceX beyond the massive market capitalization. SpaceX set aside a record percentage of its shares to give retail investors access to its IPO. Anthropic and OpenAI themselves were valued at just shy of $1 trillion each in previous private funding rounds together. These three companies are set to raise more money by going public than all other U.S. IPOs combined since at least 2022. Total proceeds from IPOs in 2026 are expected to blow previous years out of the water. All of this is remarkable, especially when you consider how relatively small and frankly unprofitable these companies are. Of the three, Anthropic is the only one on track to see profitable operations this year. SpaceX is actually losing money at the operating level. These companies are spending well beyond their revenues, investing heavily in scaling out their operations. OpenAI, for example, is set to spend $600 billion by 2030 on compute, compared to its annualized revenues of just $25 billion. So, you can see why these companies are scrambling to go public. They need a lot of money. And public markets offer another faucet through which they can access that capital. But given how heavily focused these companies have been on specifically targeting retail investors with their IPOs, it has raised some concerns. Some worry that these companies will soon be burning through the pensions and life savings of everyday investors to fuel their AI money furnaces. Well, before even demonstrating a viable business strategy, SpaceX in particular has turned a lot of heads with its abnormal prospectus. It could very well go down in history as one of the most bizarre ever seen. The company advertises itself as a bet on Mars colonization, enterprise AI, asteroid mining, and data centers in space. Its mission statement reads, quote, "To build the systems and technologies necessary to make life multiplanetary, to understand the true nature of the universe, and to extend the light of consciousness to the stars." I don't too know what extending the light of consciousness to the stars entails, but I imagine it has to do with that Joe Rogan episode he was on back in 2018. Regardless, given the concerns of an AI bubble seemingly pulling public investors deeper into it, I wanted to cover this topic. We discuss the IPOs and the details we have, the broader implications for the market, and things you yourself should consider if you are hoping to use one of these companies to go to the moon, whether figuratively or literally. Since space tourism is another one of SpaceX's hypothetical business lines, the first half of this video will really be focused on SpaceX, since we have the most details about that company now that it is public. I'll leave chapters in the description down below if you want to hop to different sections of today's topic. SpaceX, as you might be aware, was a company started and mostly controlled by Elon Musk. As the name implies, it is heavily involved in the space industry, where it has actually built a decent name for itself. The company is famous for its rockets, having pioneered techniques for reusing rocket boosters and holding a dominant position in the space launch industry. It represents 80% of global mass to orbit since 2023. Its connectivity business, also known as Starlink, where it offers internet access via satellite connection, is actually a fast-growing profit-making business. However, earlier this year, amid the AI hype, SpaceX decided it was going to get in on the action. Elon Musk combined it, or more specifically, used SpaceX to acquire his other company, XAI. XAI is known for the social media platform, formerly known as Twitter, and the AI formerly known as Mecha Hitler. The AI segment makes up about 17% of the company's total revenues, but it manages to take up the majority of the company's capital expenditures, with its spending quickly dominating the rest of the business, which is why the company is being brought up in this broader discussion of the AI gold rush. With this IPO, SpaceX is actually only selling 4.2% of its company's stock, represented by 555.6 million shares roughly, meaning that most of the company will continue to be held by the private investors who owned the business before the IPO. Elon Musk himself retains 42% of the company's equity before dilution. At an IPO price of $135 per share, the company is set to raise at least $75 billion from the share sale, all of which makes SpaceX the largest IPO capital raise on record. The company is set to exceed its original market cap objective of around $1.75 trillion, which will actually lead to it displacing Elon's other business, Tesla, as the 8th largest U.S. company by market cap. This is remarkable. given that the company's revenue doesn't even crack the top 200 list. Which brings us to the first reason why many are viewing this IPO as absurd. SpaceX essentially hit the market with a price-to-sales ratio of over 90 times. This puts it well above most other publicly traded tech companies, Google and Meta, for example, who themselves have AI businesses and are actually profitable, trade at price-to-sales ratio of over 90 times. This puts it well above most sales ratios of around that 10 times level. While these rich valuations are typically justified by higher growth rates, historically anyway, that is not what we've seen. SpaceX's AI segment is even its fastest growing segment internally. The business grew just 12.5% year-over-year in the latest quarter. Revenue for the company as a whole increased just 15.4%, well below the revenue growth rates seen by its competitors. However, most of SpaceX's valuation is very clearly being tied to its future potential, rather than how the business stands today. In fact, Morningstar analysts have argued that based on current performance, SpaceX is worth less than half of what it is IPOing for. So, it is really what Elon Musk has planned for the business that has investors excited. But that brings us to another absurd aspect of this IPO, where the company lays out the roadmap for its future, the firm's prospectus. You see, when companies IPO, they submit what is called an S-1 form in the US anyway, to the SEC for review. This document contains all the necessary disclosures and information so that investors can make an informed decision when they buy into a company. And in conventional Elon Musk fashion, the SpaceX prospectus has been pretty unconventional. Right off the bat, investors have to scroll through 11 pages of pictures of rocket ships and other space tech before they even get to the table of contents, which I suppose is fitting since it is quite common for people to throw in a bunch of random rocket ships when they trying to pump something. Not long after this, we refaced with a quote from Elon Musk philosophizing about being a spacefaring civilization, and of course the company's Star Trek-esque mission statement. In addition to a number of these grandiose statements being made throughout the document, the prospectus also includes a number of moonshot business ideas. Literally, because most of them involve carrying out operations in space for some reason, including traveling around Earth via spaceship, space tourism, in-orbit manufacturing, traveling to Mars, and setting up businesses there, building in-orbit data centers, and developing human augmentation systems, a good chunk of which, by the prospectus' own admission, is science fiction, since the technology for many of these things is either unproven or non-existent. Now, with all of SpaceX's focus on space, you'd be forgiven for forgetting that SpaceX is an AI business. But to convince the non-believers, the prospectus includes an outline of the business's total addressable market, essentially what it sees as its future revenue potential. 93% of this amount is derived entirely from its artificial intelligence opportunities, namely enterprise applications. Beyond those mistaken for thinking we're talking about a rocket company here, these figures might surprise a number of people. For one, the total addressable market is about the size of the entire US economy. And regarding enterprise applications, most view Grok as a mere extension of the X social media platform. In fact, even internally, the company actually combines many of its operating figures for both the X social media platform and Grok, seemingly demonstrating that its use is primarily for social media. And I don't know that many enterprises are keen on integrating an AI model known for undressing people on X into their workflows. The one business case the company did put forward in its marketing material of Grok being used for an enterprise effectively chalked up to being a glorified Google Translate, which doesn't really demonstrate this massive potential. And the idea of Grok as being a contender with Anthropic and OpenAI regarding this sort of enterprise application hasn't really been helped by the recent announcements from the company that it would be renting out compute power to Anthropic for $1.25 billion a month and Google for $920 million a month. Because while these deals might prove lucrative if they follow through, given that they alone would actually double SpaceX's revenue from 2025, it is a bit confusing from a company that is claiming Grok is going to dominate the space when it is renting out its capacity to other AI models that are more known for those enterprise applications. So, you can see why the SpaceX IPO has raised so many eyebrows beyond just the sheer scale of it. The way the company is being marketed is just entirely different from the company investors are actually buying into here, and that is without getting into the other quirks that come with this. The fact that Elon will be retaining 85% of the voting rights over SpaceX thanks to having a special share class that has 10 times the voting rights of Class A shares. A good chunk of the proceeds from the IPO simply going towards paying off existing obligations despite the company marketing that it will go towards developing its business. The story that Musk actually required companies working on his IPO to subscribe to Grok, and as mentioned, the company being heavily focused on garnering retail investment, SpaceX opted to reserve up to 30% of its shares for individual investors compared to the typical 5 to 10%. And the company even launched a retail side website. SpaceXIPO.com, where it provided investor access to the company's prospectus roadshow presentation, typically reserved for institutional investors, and a fact sheet. It also listed out all the brokerages where individual investors could go and access IPO shares. So, in the context of the great AI IPO race, this one really takes the cake in a number of ways. Now, regarding the two other IPOs here with Anthropic and OpenAI specifically, we don't yet have that many details on these companies' operations. While a number of details around revenue and the like have been leaked by private sources, the companies have filed their prospectuses confidentially, meaning the SEC is reviewing it privately before it is released to the public. But what we do know is that with recent private funding rounds, Anthropic has been valued at $965 billion and is set to hit $10.9 billion in revenue during the second quarter, which could actually set the company up for its first operationally profitable quarter. And OpenAI has recently been valued for $852 billion. Management for OpenAI similarly highlighted a desire to reserve a sizable portion of their shares for retail investors. And the thing is, these aren't even the only companies going public here, while they certainly are the largest and most notable. Given that OpenAI and Anthropic have been sort of competing head-to-head to be the largest pure-play AI business, we've already had a number of companies in the ecosystem like CoreWeave and Cerebras go public recently, and companies like Anduril, Cohere, and Databricks themselves eyeing IPOs in the near term, and even among currently public companies, we have businesses issuing shares. Google's parent Alphabet, for example, recently announced plans to sell $80 billion worth, on par with SpaceX's own capital raise to help fund its AI ambitions, with Meta itself considering a similar move. So, you can see that a lot of companies are rushing to raise money from investors to help fuel their intensive spending to build out their AI infrastructure, either for their own use or for their customers, and compete for that dominance in the industry, which has led to some raising concerns that these IPOs represent a way for private investors to exit and cash out right at the top of the hype, that we were democratizing access to these companies right before the bubble pops. With SpaceX, for example, given that the public float is going to represent less than 5% of the entire company, there are concerns that the stock could experience meaningful selling activity from insiders as their staggered lockup periods expire, with nearly $1 billion of shares set to unlock within the next couple of months alone. And given a number of actions from key players leading up to this IPO, it seems increasingly likely that individual investors will end up as the exit liquidity for some of these insiders. Beyond SpaceX itself focusing on giving access to the retail base, we've also seen brokerages like Fidelity, for example, actually lower its capital requirement from $500,000 to just $2,000 to give smaller investors more access to this IPO, with it being quite typical for IPOs to only be accessible by larger investors. There has also been the story around index companies like NASDAQ and the FTSE Russell, which each eased their criteria for index inclusion, allegedly at the request of Elon Musk himself, to effectively fast-track SpaceX inclusion into some of their flagship groups, something that could see SpaceX join indices like the NASDAQ 100 within its first 15 days, which is unprecedented, and something that would lead to automatic buying of this stock from funds and investors who passively follow these indices, meaning